Good morning, traders. This is Joanne with Succeed in Forex. Welcome to our news broadcast for January the 18th, 2008. The headlines out of Switzerland this morning are saying the dollar retreated after Bernanke's comments ahead of more interest rate cuts. The dollar retreated yesterday after Federal Reserve Chairman Ben Bernanke told a congressional committee that more interest rate cuts may be necessary because of the U.S. economic outlook has worsened. Sharp losses in the U.S. shares have also weighed on the dollar-yen after worse than expected results from the brokerage firm Merrill Lynch reignited investors' aversions to risk. Bernanke's bleak assessment of the U.S. economy's health in testimony before the U.S. House of Representatives Budget Committee further added to the gloom in the market. The Fed chief's comments were widely seen as a signal that the U.S. Central Bank would slash rates by 50 basis points at the month's end, which would undermine the attractiveness of the dollar-denominated assets. Bernanke also told lawmakers that he does not expect the United States to slide into a recession, although that provided little relief to the markets. A survey showed factory activity in the U.S. Mid-Atlantic region slowed dramatically in January, reinforcing fears of a recession. Also on Thursday, the Philadelphia Federal Reserve Bank said its business activities index plunged to a minus 20.9 in January from a minus 1.6 in December, putting further pressure on the dollar. Yesterday, the dollar-yen was down approximately 88% at 106.41, which was very close to the session low at 106.37. The euro-yen hit a session low of 155.70 and closed at 155.78. The pound-yen ended down about 49% at 209.65 after hitting a high of 212.41. Just looking at my charts, it's now trading at about a 210.33 range. And the euro-dollar has not been changing too much. It's been trading between 146.39, 146.45, that area. European currency was earlier bolstered by comments from European Central Bank's President Jean-Claude Trichet. He said efforts to anchor inflation should lead to high levels of growth in the Eurozone. Elsewhere, the euro-pound went lower by 54% to 74.31. And the pound-dollar rose 4% to 197.02 after the deputy governor of the Bank of England said inflation is likely to rise well above the target in the months to come. The pound is currently trading around 95.90 area. Looks like it's retesting the area for the centennial at 9600. The pound has come under pressure in recent weeks as weak data led to increased expectations of a UK rate cut. The comments have shifted investors' focus to inflation, and that could limit the extent of the interest rate cuts. The dollar was slightly stronger in Asian session today, as traders shied away from taking positions in front of the U.S. holiday on Monday. The yen, which had early bid on safe haven buying, lost ground, reaching 107.33 in the late session trading. Despite the dismal performance of the U.S. equities market, the Nikkei ended the session higher after performing an afternoon rally to buck the trend. The Japanese finance minister indicated that the market FOREX intervention is not on radar for now, although he added he is watching the markets closely. Japan's December consumer sentiment fell to 38.0 versus 38.2, which was expected. This was the lowest level in 4 years, as falling wages, rising energy costs, and growing fears of inflation took precedence. In addition, nationwide department store sales in December fell to a minus 2.3% versus 9% in November. This was the first decline in 2 months. Analysts are saying there are 2 reasons for this. First, it emphasizes the point that the U.S. economic slowdown should not be viewed in isolation. This is a theme that the market is begging to pick up on again. Secondly, this weak Japanese data will help fuel speculations that the next move by the Bank of Japan will be a rate cut. The Bank of Japan has reduced interest rates from lower levels and under similar circumstances in 2001, but it is believed they will hold rates steady for an extended period in 2008. Markets this morning were watching for a weak UK retail sales number to confirm consumer spending is moderating with the economic slowdown. Numbers were posted this morning at approximately 4:30 a.m. Eastern Time. And for those of us that were up trading, we saw approximately a 100-pip drop in the pound, then followed by the euro and then by the pound yen. Since then, the pound has retraced just slightly, but it is still pushing down. Both the CBI distribution trade survey and the BRCs indicate a slow December, which put risk to the downside. The U.S. events for the shortened U.S. session start when Richmond Fed President Jeffrey Lacker is due to speak. That's followed by the University of Michigan and the leading indicators reports, and that will round out our Friday. That concludes our news for today and for this week. We hope you've had a wonderful trading week, put some pips in your account, not given any back. And we would like to invite you to join us at our website, www.succeedinforex.com. There you can find information about our training center, and also there is a link to our Yahoo forum, which is also called Succeed in Forex. Have a wonderful weekend with your family and loved ones, and we will see you on Monday.